Alright, so this is our budget special edition today where we will begin the week by focusing on taxpayers and the kind of demands or expectations they have. We all know that we have two tax structures right now, the old tax structure where you get benefits as per ATC and other sections, and you have a new tax structure where you do not get any tax benefits or SOPs but you have a lot of money in your hand. So talking about expectations, we know since a lot of years ATC has not been touched, no more changes over there, and also a lot of people, although are going towards a new tax slab or the new tax structure, should we be expecting any kind of tax swaps or any kind of relief on that front? Let's get on board our guest today, Ketan Dalal, Managing Director, Katalyst Advisors. Ketan, hi, good evening and welcome to the Money Show. And Ketan, although it is a vote on account, we all know that 2019, also an interim budget, we got a lot of surprises from the Modi government, and a lot is being said on the same lines to be happening in this vote on account also. So talking about announcements for a tax person or for a salaried person, the analysis so far is such that 60% of the crowd is still with the old tax structure. Okay, although the new tax structure has more tax slabs and you get more disposable income in your hand, it seems that a lot of people, a lot of taxpayers, salary class, they are opting more towards the old tax structure also because you get the benefit on home loan interest deduction over there. So looking at this number, should we be expecting any changes or any kind of additions, especially on the home loan interest deduction, because that is something which a lot of people are anticipating and even sources are saying. So we also have other expectations which might coming, which might be we might see them coming as far as our taxpayer is concerned, but specifically about home loan, because this is something that's been untouched since a very long time, Ketan.
Yeah, so Kavita, as you yourself mentioned, this is more like a vote on account, but yes, one cannot rule out the possibility of some SOPs within the electoral constraints. So I think let me broad base your question of home loans into three parts, Kavita. One is in relation to housing, second is relation to education, and third is medical. And all of these are significant, sort of pressures on the wallet. And home loans, of course, is very important, as you said. And the amount of home loan deduction is very, very small. If I remember rightly, 1.5 lakh, that's very small. And I'm not sure whether to call it an expectation, but certainly it's a demand that it should be increased. But I think the broader issue, as you said, is also that 60% are under the old regime. And, when you use the word salaried class, Kavita, I think it's important for us and for your viewers to understand that salary class is a very generic term. A person drawing 5 lakhs is a salaried class, and person drawing 5 crores is also a salaried class. And the number of people in the higher slabs is now slowly increasing. So with that, with the 10 lakh minimum threshold for the highest rate to kick in is also very unreasonable. I think it really needs to be increased, and I think the rate also of 36% is 39% actually, assuming you don't claim a deduction, is also very high. So I think it's not just a question of home loans, but I think one has to look at it holistically. But I'm not sure how much can be done or will be done on February 1. But certainly one hopes that when the new government is in place, so say June or July, one would be hoping that there is a reduction in rates, there is an increase in slabs, and not only the home loan, but also education and medical are also dealt with as a sort of holistic package for individuals. I wouldn't just say salaried class.